All right. Ladies and gentlemen, welcome back to the Wealth and Wisdom Show. I'm your host, Tyler. I'm the head editor here. And today I have the wonderful opportunity to talk with Adriano Raimondi. And we're going to get to him in just a second. Adriano, I wanted to start before we get going. I'm going to give you a little blurb. But I wanted to start with something I actually stole from Prof G Markets. So, Prof G, do not come for me if you see this video and get upset. It's actually a really stark figure that we need to talk about. And that figure is somewhere between 9.3 and $11.07 million. Now, that number, for everyone listening, is the number of dollars lost every day to strictly operational risk management failures in the crypto space. If you expand that to include crypto hacks, trading risk losses, and other major risk losses, that number gets even higher. The world of crypto, as I've talked about before, and I'm going to be talking about in my soon to be released piece on tokenization, is still new, and we have yet to build out a robust infrastructure to protect against risk. Today's interview is someone who is helping to do that with BDIC. Adriano Raimondi is, hope I'm pronouncing that correctly,
Oh, good.
um,
Yes, sir.
is a certified anti-money laundering specialist and a strategic leader with more than 18 years of experience in risk management, financial crimes investigation, AML compliance, and capital markets across premier institutions and high-risk sectors. Adriano, welcome.
Thank you, Tyler. Thank you for having me.
Yeah, absolutely. Now that that little blurb is aside, we're going to jump right into it. So, first off, tell the listeners a little bit about yourself, and what you do.
Yeah, thanks, Tyler. Yeah, so I'm Adriano Raimondi, Chief Risk and Compliance Officer at BDIC, Blockchain Deposit Insurance Corporation. So, as Tyler was mentioning, spent close to 2 decades leading financial crime, AML, and risk management programs across major banks and advisory firms. My role now sits pretty much at the intersection of compliance and innovation and crypto risk assurance, essentially ensuring that blockchain-based platforms and investors are operating in environments that are safe, transparent, and aligned with the same industry standards that you'd expect in the banking world. At BDIC, I oversee the global risk, AML, and regulatory strategy. So everything from designing compliance frameworks and audit protocols to managing regulatory relationships across various jurisdictions.
Perfect. And that, um, I want to just pause right there for a minute. For people who are new to the crypto space, I know that's something we've covered a lot on this newsletter, but it's still fairly esoteric is the word I like to describe it as. It's still new. Um, Fraud, risk management, those are big, really valuable and really vital industries in that work in the back end of our financial system. Most people will never um they will never run into like a risk management software or something on the back end of their bank account or Robinhood account, but they're there. And it's frankly, I believe it's time to move that into mainstream. And it's actually going to lead us into this next question here. So, for someone who's totally new to your world, specifically
Mhm.
anti-money laundering, financial crimes risk, um, how would you explain what you do on like a day-to-day basis and how that led to working for a blockchain deposit insurance company?
Yeah. So, Tyler, I guess the simplest way to explain it is I help institutions and regulators understand where money is going and whether that money should be going there. I design and oversee safeguards that stop dirty money, protect, honest customers, and prove that institutions are playing by the rules. For much of my career, I've led financial crime and AML teams in traditional banking and consulting firms where, we investigated high-risk clients, we monitored various transactions, and help build the defenses that keep the financial system, clean and tidy. Crypto entered the picture because it represents, both a challenge and an evolution of finance, I think.
Right,
The same
right.
principles of transparency and trust apply. But the technology moves faster in crypto and the risks are decentralized, right? So my move to BDIC was sort of a natural evolution, helping bridge the gap between traditional compliance disciplines and decentralized ecosystems that now handle billions in assets daily.
I think that's one of the things there that we don't realize enough, at least in like the mass financial media. We're starting to see it more now because people like BlackRock and JP Morgan are starting to perk their ears up. But for years now, right, people were like, oh, crypto's just this kind of out of the way thing. It's the gambling den, basically, where people go to blow their money. They don't realize how big these sums actually are. I know we've talked about it with Jeff with some of the losses that happened last year in the hundreds of millions of dollars, and those are small.
Yeah.
Um, but you're right, this is a big deal, and it's a big unregulated. Here's the thing. I don't like regulation very much. I'm fairly
Mhm.
libertarian in that way, but it's definitely it doesn't have the infrastructure it needs to prevent really, really painful losses.
Yeah.
Um, and I love the fact that you described it, one other thing, as wondering where finding out where money's going and deciding whether it should go there. You know, when I was in my undergrad, Adriano, that was one of the things I noticed a lot when other kids were wondering about like, oh, how did this or that event in financial history affect stock performance? I was
Hmm.
wondering, how did that money get there in the first place? I was asking questions like, okay, how did Magnetar Capital suddenly get all of these mortgages that
Hmm.
were high risk and were able to sell them to institutional investors and nobody said anything? You know, how come people were able to pull out mortgage-sized loans to buy stocks in the 1920s? Um, and no one else seemed to answer that. But that what you just described is exactly how I like to look at the financial world. It's like, okay, where's this money going? And should it be going there?
Absolutely. Yeah.
Um, sorry, go ahead. You were going to say something.
No, no, I mean, yeah, you're absolutely right. And the regulatory framework basically gives you sort of those guardrails and uh, lets if you're coming to an impasse, should you be passing that impasse or not, right? So, I mean, without, that regulatory compliance framework in the background, um, you know, you're um, you're opening up yourself to a whole bunch of different things, whether that be, financial loss, reputational damage, legal damage. So, having those regulatory guardrails in place and consistently, making sure that they're operating as they should and changing with, whether that be new regulations or, different infrastructures that are popping up is vital to the success of, both a financial institution as well as, any sort of crypto company that's operating in that ecosystem.
Very nice, very nice. Um, we're going to kind of play on that just a little bit with this next question here.
Yeah.
Why does it feel like I don't know about you, but I've noticed this. Obviously, AI wrote helped me write these questions for you, but these are my thoughts as well. I've
Hmm.
noticed like a shift in the tide a little bit when it comes to this.
Hmm.
I feel like I was pounding the table for a year telling people like, what's missing in crypto is not like more ETFs or more money or more people using. It was infrastructure.
Hmm.
It was stuff like what you're doing. How come it feels like why do you think there's been such a shift recently? I feel like in the last 2 or 3 months, all of a sudden everyone's worried about risk and compliance, and they're actually worried about infrastructure. You had Senator Kennedy talking on Capitol Hill about do we allow deposit insurance for these things? Like, where did that come from? I feel like it kind of came out of nowhere.
Yeah, I mean, I think I can break it down. I think three things have continued to pop its head up and
Hmm.
sort of present itself, right? That'd be scale, sophistication, and I would say consequence, right? So from, first scale, like crypto evolved from like, and you said it, you kind of hinted on it when you were discussing the previous question, went from sort of a niche trading sort of platform to mainstream financial systems, with retail and institutional adoption, right? Second is sort of that sophistication piece where, threat actors became more organized, right? Methods for laundering or exploiting vulnerabilities became more advanced, right? As as much as it was prevalent in traditional finance or TradFi, things move a lot quicker in sort of that crypto ecosystem, and so do sort of those threat actors and some of those, non-kosher actors, right? So there's, that's the second component. Third is the consequence, right? One major hack of, a wallet or platform failure can impact millions of users globally, right? So, you know, insurance went from, I would say, like from theoretical to essential because, users and regulators demanded guarantees, right? You can't scale adoption without trust, and trust requires structured, risk mechanisms in place. And that's sort of, that's what we're doing at BDIC, and that's why we created, and that's what we're looking to provide.
No, yeah, I mean, I think that's important. You hit on some important points there. Obviously, with wealth and wisdom, we try to make it a little bit more simple. So I'm going to break down, at least as far as I understood what you were saying for the people who are listening later. For everyone at home, a threat actor, imagine anyone who's trying to steal from you. You know, there's been a couple big ones that hit the news recently. We have things like Prince Group that was over in the Philippines. I definitely got that wrong, but these threat actors, they're hackers, I would say kind of dark financial engineers as well. People, because it's not just backends and software. They're also doing things like manipulating the market to siphon off a bunch of wealth before people find it. And
Mhm.
that's who we're dealing with now. It's no longer like I think the classic one that always comes to mind is the Norwegian prince, or not the Nigerian prince, or the I'm stuck in another country scam that was on emails back when my dad was using the internet, right?
Yeah.
It's not like that anymore. These are highly competent individuals. They are people who, in some cases, have access to funding from either terrorist groups, other governments. In very few cases, I know Liam got mad at me for bringing that up like it was common. Apparently, it's not, but they're more they are more confident, they're more competent, and they have better tools. And
Mhm.
it's a bigger pot to steal from too. If no one's watching the store now, it could be easily over 100 million gone like that. Um, so let's talk about this too, because you said, BDIC is here to provide that trust and that structure. Um, Obviously, when people hear the word crypto anything, their mind defaults still to this isn't real. Um, and especially in this case, um, even I thought this when Jeffrey first approached me. I'm like, okay, what kind of what kind of scam are you running? And I've told him that before when it's like you're being underwritten by Lloyd's. What the frick are you talking about? Um, so what does BDIC actually insure? And like, give me some specific examples of when that might come into place for wallet holders and platforms.
Yeah, that's a great question. And I don't think your sentiment is alone in sort of the marketplace, right? Anytime somebody hears of a new crypto project, you got some that get excited about the potential sort of returns, if getting in early is something that you like to do, but then there's also obviously the other side of it is people's antennas come up, right? So, fair question. So what BDIC doesn't insure, we'll start with that, is price risk or speculation. Um, what we actually do ensure is custodial integrity. So what that means is, protection against very specific loss events. whether that be exchange insolvencies, wallet breaches, cyber intrusions, and sort of catastrophic operational failures. For individual wallet holders, we provide confidence that if a covered exchange holding their assets collapses or gets hacked, there's a regulated claim and a reimbursement pathway. For platforms, we help them meet compliance and audit standards as well, needed to demonstrate financial soundness and investor protection. Ultimately, we're trying to solve for, I would say, trust at scale. So, and I think that's really a big cornerstone missing from, the early crypto markets.
I would 100% agree. Um, and just to the insolvency point as well, this definitely still feels like the Wild West. I've said it before, Jeff and I've had this conversation. This industry is only 10 years old, maybe. The wider financial industry is like 100 years old minimum. And if you go
Mhm.
back as far as the early joint stock companies, we're talking hundreds of years old and hundreds of failures that got them to this point, for good or for bad. But also, your comment reminded me of something I saw this morning. And I don't want to bash anyone on this podcast, so I won't name names. But I just opened LinkedIn. I was waiting to do another interview, and this guy made a comment about Tether all of a sudden buying tons of gold. Tether is a stablecoin issuer for people at home. They have a pretty diverse balance sheet, so they don't just carry treasuries, they carry gold, they carry Bitcoin, right? And this guy was bashing on Tether because it was like, oh, why are you buying all this gold when you have Bitcoin? And the question he asked at the end was a leading question. It was something along the lines of like, okay, does this prove that gold's the only real store of value, or does it prove that cryptocurrency actually has no basis behind it? I'm like, neither of those are true. As a financial company of Tether's size, they have to care about things like balance sheet strength. And having
Mhm.
that real tangible asset that they can keep in a vault somewhere that is under their name, it's insured, it has an easy audit trail, it's easy to value it, that matters for users. And I think maybe it's the death throes of the hype trade era of crypto that we are moving out of now. But this stuff
Mhm.
matters now. It matters that your balance sheet is strong. It matters that you have someone on the back end of your exchange that's willing to provide insurance and a backstop for claims if you screw up. Um, it's been really painful over the past, I don't know, 7 to 18 months for exchanges that either get hacked or have a sudden risk failure. They have to pay out billions of dollars in losses from their company directly. It sends them under. So I it's just so you know, this is the reason why I came on. Why when Jeff originally approached me, I was like, I would like to do it. I didn't have the time to do it right away, but when I originally why I joined was for this reason, is because
Mhm.
BDIC is providing a service that doesn't exist.
Yeah, for sure.
Um, let's walk through that claim pathway that you talked about as well.
Yep.
So let's use an example, like say an exchange goes wrong, hacker breaks in, they're suddenly insolvent for whatever reason. They're pulling some, MSTR, financial engineering, whatever it happens to be. Um,
Yeah.
what can the consumer expect, the customer, what can they expect from their BDIC insurance policy? What does that claim pathway look like for them?
Yeah. Another great question. I would say really transparency and verification drive our claims process. So when a covered incident occurs, we trigger basically an incident response playbook. Internally, we'll gather facts, we'll lock down relevant exposure data, and coordinate with platforms, investigators, and maybe potentially regulators where, when needed. From the insured customer's point of view, it should feel, structured rather than sort of chaotic, right? It's a very chaotic and nerve-wracking experience, obviously, to open up your wallet and see, a good chunk of your money gone, right? So we try to make that, this process as structured as possible. We feel it's obviously very important. So, the client or the customer, they'll be notified about the incident and what coverages may apply, right? Their eligibility and balances are confirmed through, a defined documentation and verification process. They receive clear communication on timelines, status updates, and basically what the outcome is. Behind that, my team ensures that, data, evidence, and AML considerations are handled correctly. So payouts are accurate and timely, while also, it's important to filter out any sort of opportunistic or fraudulent claims. So we have to take that into consideration. In the end or the end result, it should be swift and auditable, reimbursement process, right? So something, not taking weeks long, having a mystery of where your funds went or are you going to recoup any of those losses. So our goal is, for the insured customer to feel, the same confidence in BDIC coverage as a traditional bank depositor would feel under FDIC insurance, right? So clarity, integrity, resolution.
Nice. That I'll tell you what, as someone who works kind of I work in the startup space, but I've spent a lot of time in my undergrad looking at financials. That's one thing I think the insurance industry lacks. I know it's kind of a joke around with like car insurance or health
Right.
insurance where something happens, you go in, you get it fixed, and then you have to wait 6 weeks before a claim shows up. I know that's one thing that you guys are working on, talking with you, talking with Jeff, that this is supposed to be fast. Which first off, I'm shocked right now that big insurance companies aren't shaking in their boots over that. Because they've kind of defaulted, I feel like, to this model of, well, the longer it takes for people to get their money, the more gains and interest we can receive from our assets. When really, I believe it should be that insurance agencies and insurance firms should structure it like, well, we have to pay out these claims anyway at some point based on these probabilities. What can we invest in that will cover that loss? And so that I think is going to be something that's going to be huge for people, especially in the crypto space, even especially real crypto natives, but even people who are just getting into it. They're used to that speed. They're used to T0 or time zero, same day settlements. They're used to being able to send USDC, Solana, or whatever to their buddy overseas without any kind of regulatory hiccups. And so I think that speed's going to be a huge, vital for your client base, but it's also going to be a huge disruptor in insurance as a whole, because you're not going to have to wait around 4 weeks to get your money back.
Yeah. Yeah. Very, very important for us. I mean, obviously um, the customer experience piece, it just puts more validity behind sort of that transparency piece that we're trying to, to solve for as well. So very important.
Perfect. Now we're gonna get into some strategy, which I'm actually excited about this. This is kind of the stuff that I nerd out about is like, okay, what do we
Eh,
do? How do we put this puzzle together? Um, we're talking risk.
yeah.
For people who've watched my show before, uh, 2026 has started with a bang, and 2025 was not much calmer, right? I make jokes with people like Brandon Byrne about Blow Uptober and the September scaries because that's what it felt like. And January continued that trend. So now and looking forward in the short term, right?
Mhm.
If you were talking to a smarter but not really a technical investor, not someone who's used to crypto, if you had to break the risk of crypto into a couple buckets, what would those look like, and which ones do you think we're not paying enough attention to right now?
Yeah, great question. I'd categorize crypto risk, I would say, in three buckets. The first would be platform and operational risk. So how strong the exchange or custodian is, how they govern themselves, how robust their controls and infrastructure are. The second would be financial and market risk. Volatility, liquidity, leverage, concentration, specific tokens, things of that nature. And the third would be financial crime and integrity risk. So AML, sanctions, fraud, illicit finance exposure, both on and off chain, right? Um, I think which ones are sort of most overlooked or which I would say bucket or category, in my view is platform and operational risk. So, many people obsess over token prices and yields, but their actual exposure is often to the quality of the platform they use, right? A sound asset on a weak platform, I think, is a much bigger problem than the other way around, right?
Hmm.
So as everybody's, you know, trying to maximize their gains, trying to get as much leverage as they possibly can. They're overlooking sort of that one key piece, I think, which would be, that platform and that operational risk that comes with that platform, right? So doing your due diligence, understanding where you're placing your money, obviously very, very important. So I think that's how I would sort of categorize the three different risk buckets.
I would agree with you on that. I mean, especially for the lacking platform risk. I know that my generation, and to some extent the millennials as well, we're not used to new market structures. There hasn't, I was racking my brain about this before our call. I can't think of a case where we've had a new product, new financial product, new financial market set come online since the 2000s. I mean, we did have the CDOs, but those were not new. They've been
Mhm.
around for a minute. Um, and so we're not used to situations like what happened in the 70s and 80s, where there was a significant time lag between like the Chicago Mercantile Exchange and the New York Stock Exchange, where people could either leverage that as an opportunity or steal from people because of the fact that the infrastructure and the computers that were being used were not fast enough to maintain that price. Um, I think that's a big thing. And honestly, a lot of the fraud cases I've seen recently, I haven't looked into all of them in depth, 100% honest, but a lot of the big fraud cases that have shown up recently, I feel like are platform weaknesses of some form or another. Either
Mhm.
they weren't considering their security enough, they left back doors open for people, or I know the famous one that Chaos Labs leans on is that previous until today, there weren't really strong volatility, volatility and data intelligence infrastructure in the crypto space, so people didn't know when things were happening until they happened. I know that's one thing they're trying to solve right now is going in and saying, okay, can we gather this data and point out in real time where things look weird? Um,
Mhm.
but I think that's a big thing of going through and being like, okay, these are the issues that we have to worry about, specifically on the platform side. We're running short on time, so we're going to try to answer one or two more of these questions. So I would like to hear your answer on this one. I've covered it. I know Jeff has talked about it a little bit, but I think it connects, especially since we're talking about platform risk, and also one that I would add is brand risk. We recently at BDIC had a case where
Yep.
someone actually stole two domain names. They stole
Yep.
ours, they stole BDIC brand, and they also stole the brand of an Indian bank to create a fake website that they used to scam people out of crypto. So um what did that episode teach you about specifically fraud and due diligence? What kind of stuck out to you about that? What shocked you?
Yeah. Yeah, for sure I was in the throw of things with that occurrence, but it really reinforced, something that I think I've known since my banking days, right? Fraud always thrives on, I would say, obscurity and assumption, right? When we discovered entities, promoting fake BDIC coverage, we acted immediately and publicly. Transparency was critical. Educating users, working with regulators, and enforcing trademark and obviously compliance actions, right?
Mm.
Um, the lessons for users, and we've touched upon this a little bit throughout our conversation as well, is, you know, for users and for the industry, I think it's quite simple. It's trust but verify, right? Always confirm registrations, licensing, contractual linkage to, legitimate coverage. The crypto ecosystem, I think will mature when participants adopt, that same level of due diligence or mindset as in traditional finance, right? So I think really that's the key piece. Trust but verify. Always look to do your due diligence. It would be no different than what you would do in traditional banking world, right? So
Wait. Well, we're running low on time here today. It's been a pleasure talking with you, Adriano. If you were to leave one thing with the listeners and readers of Wealth and Wisdom, what would it be? Just in the last couple minutes here.
yeah, I mean, I really think that the crypto ecosystem is continuously evolving, is continuously changing. Um, and having sort of that ability to trust, have that ability to be or feel secure where you're placing your money, is just going to continually become more important for, either you know, people that have been using crypto for a long time or, people that are just jumping into it. Um, we're really trying to solve, a really big problem, I think in sort of the crypto ecosystem now with our, insurance coverage. And I think that as users continue to explore new ways of moving money and entering into, non-traditional finance, really having that foresight and having that comfort of having insurance, protect their assets. I really think will play a big part in how the crypto ecosystem grows, how it becomes more adopted by new users, and how it will continue to evolve, and also from a regulatory perspective, how that will also sort of cement or drive the regulatory world um, to work closely with, with the crypto ecosystem to continuously build out, those frameworks from a regulatory perspective.
Perfect. I'm going to throw one more at you because you answered that quicker than I thought. Um, let's predict 5 years from now. What does the crypto world look like from a risk and AML perspective? What do you see? What's coming down the horizon for you in your perfect world?
Yeah, I mean, and I think I kind of touched on it right at the end of my answer there, right?
Yeah.
I really hope that we'll see, regulatory harmonization. So global standards that give clarity for platforms and confidence for users, right? That crypto insurance will not only be, seen as an anomaly, but really as a requirement for legitimacy. Just like deposit insurance or capital adequacy in banks, that sort of legitimacy piece is big, right? Most importantly, I really hope that users no longer need to think twice about safety, because protection, transparency, and I think responsible innovation have finally converged, or is starting to really converge in, that crypto ecosystem. Um, so I think we're good times ahead.
What a great way to end on that. Adriano Raimondi, everybody, thank you so much for coming on the show. Um, as I've said before, BDIC is getting into big things. There's a token launch coming soon, and you will all be hearing about it now. Um, thank you everyone so much for watching, and we will see you guys in the next episode.
Awesome. Thank you, Tyler.
Thank
Take
you.
care.
Bye, everybody.
Bye bye.